Alibaba stock just reported earnings. The main highlight, cloud computing revenue up 34% year-on-year. Despite this, the stock is down about 1% today. I've done tons of videos on Alibaba stock saying how cheap it was, under $100 per share. So let's see if I think the stock is a buy today. If we zoom out, Alibaba has seen solid revenue growth over the past decade. Their revenue has grown from 101 billion Chinese yuans or $14 billion to 1 trillion Chinese yuans, which is about $143 billion. They just reported 5% year-over-year growth, and analysts are expecting growth to continue as they project revenue growth to be between 6 and 11% over the next 3 years. I believe they can achieve this, especially with the cloud segment growing at such a fast pace. As far as profit, their net income took a hit in 2022, but it has been growing nicely since then, and analysts are also expecting good profit growth over the next years. They are expecting Alibaba to reach 49 Chinese yuan this year and grow to 85 in 3 years, which is around $12 per share. Then, in order to calculate the intrinsic value of the company and potential future returns, I use my spreadsheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value, according to my low assumptions, is $119 per share, middle $193, and high $293. And because the stock is trading at around $158 per share, this means that if my low assumptions occur, you would get a 4.9% annual return on your money, middle 13.8%, and high 21.9%. As far as my assumptions, I assume Alibaba grows revenue annually over the next 7 years between 5 and 9%, the average of profit margin and free cash flow margin between 12 and 20%, and I assign the PM price to free cash flow at the end of the 7 years of 15, 17, and 19. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Moreover, Alibaba is now trading at a PE of around 20, and therefore we can conclude that the company is now trading around fair value. Alibaba also has a good balance sheet, as they have $52 billion in cash and $39 billion in debt. With that extra cash, they've been able to return value to shareholders by buying back shares, which is very positive for shareholders because you own more of the company and share the profits with less people, and pay a small dividend, which currently has a yield of 0.6%. As far as the risks, I believe the geopolitical risk of investing in Alibaba will always be there, and it's a risk we always have to take into account. The other risk is that their free cash flow has taken a big hit, but this is because they are spending a lot of money on AI, which I think will pay off. In my opinion, Alibaba was clearly undervalued, and the risk-reward was very attractive when the stock was under $100 per share, and I now believe the stock is fairly valued. I am selling just a bit of my position to take some gains, but I am not buying, as I am already up more than 100%, and I am interested in less than $100 per share. Lastly, if you want a discount on stockanalysis.com, the best place for stock data, grab my code in the description. I hope you found this video valuable. Let me know what you think about Alibaba stock earnings in the comments, and I'll see you in the next one.